We have Ruurd Brouwer here, Chief Executive Officer of TCX, well-known currency specialist firm presenting at the Climate Bonds Conference. Now, Ruurd, there's often discussion about currency risk and bonds, but not a lot of understanding. Can you just give us a little bit of background on that, please?
Key issue is that most of the investors in the sustainable bond space, they have all hard currency balance sheets. It's pounds, it's dollars, it's yen, it's euro. And the demand in this space is actually coming from 60-70% from emerging markets, which means that ultimately in 9 out of 10 cases, the companies that get the investment earn local currency. So they earn Tajik Somonis or Rwandan franc. And the mismatch is a key issue. So it can become green and sustainable, but it becomes financially unsustainable because of currency risk.
Secondly, Ruurd, we're seeing more and more institutional investors consider increasing their exposure to emerging markets, and you've mentioned that. Not just their exposure to emerging markets overall, but in particular in regard to bonds and looking for longer tenor bonds and longer investments. So how does an institutional investor hedge against that risk?
Yeah, and then it becomes important what are the markets they're looking at. So if you look at India, Indonesia, Brazil, there's hedging markets and there's also often local currency supply for 5 years, 10 years. But the moment you move to the real larger infrastructure, you need 15 years, 20 years. And the markets are either absent or illiquid. And it's also the role of TCX to fill the gap where commercial players do not offer hedges. We offer. So we do India for 30 years, Indonesia 30 years, but also Sierra Leone, Leones for 15 years.
So the lesson is that if we're talking about significantly increasing institutional investment, offshore investment in emerging markets, the large ones in Asia and South America, then we also need to think about how our currency hedging markets are going to develop to help facilitate that investment.
Yeah, absolutely. Because the key risk otherwise is that you end up with a sustainable investment from an environmental perspective, but an unsustainable investment from a financial perspective.
Ruurd, CEO of TCX, thank you very much for speaking to us at the Climate Bonds Annual Conference.
Thank you very much.